Gentlemen, so much more to speak about. Siddhartha Khemka, Head of Equity Research, Wealth at Centrum Broking, joins us on the show as well. Siddhartha, good afternoon. Thanks so much for joining in. It's banks all the way, and private banks are packing a punch. If anybody thought that these banks are expensive, every time people think they are expensive, the price action kind of belies that fact, makes a mockery of all those valuations, and the prices continue to move up. What is the house stance on the large cap private sector banks in the Nifty?
Yeah, good afternoon, Neeraj. You rightly said the movement in banks have rightly come back and have again said to the market that the valuation is up for anybody who is grabbing them. The view on the large private sector banks from our house is more towards a tactical play as of now. If you leave apart the banks which are doing well, the names like IndusInd, HDFC, Kotak, yes. These are on the fundamental side, they continue to do well and remain long-term stocks. The other banks like the likes of ICICI, Axis, which were grappled with the asset qualities, there you see that the expectation is the worst is behind. Valuations had come down to lows, and from there these were the kind of stocks which could bounce back on rallies. These were the stocks when the market was at highs, these stocks were at lows. So these were the kind of beta plays which are playing out consistently for the last few weeks, last few months.
So that, the other outperforming space, at least in terms of earnings delivery this quarter, has been cement. And I want to talk about Ultratech. From amidst all the things that are happening within the group as well, this one stands out in the cement pack. Again, a stock which is not cheap, but people are willing to pay top dollar for maybe the assets and the distribution that they have to the brand that they have. But it's across the board in the cement space as well. What's the view on Ultratech? And do you guys have a favorable view on any single cement name that people can invest into afresh?
Yeah, Neeraj, so to start with, I am not ready with the disclosures on the cement stocks. However, having said that, Ultratech is among the largest cement player in India, has done well consistently, has added capacities at the right time. If you see in India, the demand is both from the housing side as well as from the infra side. So last few years when the housing were doing well, the cement companies did well. Now that infra is picking up, the demand for cement companies have been there consistently. So despite realization not doing well, you see volumes growth for most of the big players, cement players, they are upwards of 10-15%, which has helped them. So officially, so we have coverage on cement, and we have a positive view on companies like Ultratech, JK Lakshmi Cement, JK Cement in the mid-cap space. Ultratech continues to remain the preferred stock in the cement space.
Now? Okay, so that's of course the view on some of these large cap names as well. And Siddharth, I want to talk about one of the stock ideas that you've given us today, because I think you'll be ready with the disclosures there as well. And the reason I bring up again Aarti Industries is the fact that this basket as a whole has given blockbuster results this quarter. Name a specialty chemicals company, and I think it's done extremely well. Be it Sudarshan, be it Vinati, the earnings delivery has been spectacular. Why do you guys like Aarti from all the others?
Yeah, so I'm glad you brought up this one. You would remember last time I have been consistently talking about Aarti. Even last time when I came to your show, we had a buy rating on Aarti. The stock was that time at about 540. And I think in a month's time it has moved up to 600. This was after the quarterly numbers wherein the company's PAT grew 35%. The specialty chemical space has been doing well for India as a whole, and if you see, most of the specialty chemical companies have been reporting good numbers. The volumes have been growing. That is largely on back of a structural shift that we have seen over the last few years wherein the global major buyers have preferred India as a supplier for their raw material requirements in specialty chemicals. Aarti has done well in terms of increasing capacities at the right time. Last year it did a capex of almost 500 crores and increased capacities. This year it intends to do another capex of a follow-up capex of 400 crores, which would add more capacity. So that on back of those capacities, we see a 15% volume growth for next couple of years. That should help the company to report a 20% PAT CAGR. If you see the return ratios, they are upwards of 20%. Valuations are still after, despite the movement in the stock, is still at 13-14 times. So that's the reason we like Aarti Industries.
Again, Siddharth, you may not really have the disclosures ready for this, but any thoughts on this? I think commodities by and large, at least the global commodities, industrial commodities are coming back. It's being visible in the metal names, it's visible in crude, and these two have a story of their own to tell as well.
Yeah, so as you said, we don't have a disclosure ready on these stocks, but the overall house view on the commodities is that they could see a gradual recovery from here on. We saw the Fed, US Fed comments yesterday, which says that the US economy is on a strong footing, and so overall demand is expected to pick up gradually, which is leading to the rallies in commodities in India as well as I believe global stocks in commodities. So that continues to plays out, and one can keep a tactical watch on the commodities side. Obviously the fundamentals will take time to come into numbers for these companies.
Okay, in a bit we'll talk with Siddharth Bhamre about Strides Arcolab as well. That's the top loser on the F&O counters today, and a big move there. So we'll tell you what brokerages have to say. But I think Siddhartha Khemka has some more ideas to give out today. And Siddharth, Power Mech, that's the interesting one. Why are you liking this? Why are you liking this stock?
Yes, so Power Mech is a small cap company with a market cap of 800 crores or so about there. In this market, as I was telling you earlier, when the market is at peaks, you find very few stocks which are doing well and are at lows. So the stock is at current price of 540, closer to its lows of 520. Interestingly, last year the company came out with an IPO at about 640. So why this stock is at lows is because FY16 the company had some issues with regards to its businesses. The company is into providing infrastructure services mainly for power companies. It does EPC work, civil works, does balance of plants work, and it also has started getting into O&M, that is operation and maintenance of power plants for independent power producers. So why we like this stock? The company has done consistently well. It has a current order book of 3,500 crores, which is 2.5 times its FY16 revenues. If you see, the company focused on O&M in the last few years. The contribution of O&M has gone up from 6% to 27% in FY16. It has not only helped the company improve its margins from 12% to 13%, it has also helped to bring down the working capital cycle, which is a major issue for a company which is there providing services to the power sector, which is reeling under their own problems and pressures. So that has helped lower the working capital cycle, increasing the cash cycle. Going forward, the company expects the O&M to be the major driver, which is more stable in terms of cash flows, doesn't require much capex, and that would be the driver for the company going forward. If you see in terms of financials, sure.
No, fair call. And Siddharth Khemka, before we thank you, I think the other idea, or the last idea that we haven't discussed today is Jagran Prakashan. What's the rationale here?
Yeah, so Jagran is a print media company. As we know, it has a publication called Jagran, which is India's most widely read newspaper. The company is doing well in its core business, that is the print space. The ads are growing for it on a 10-15% basis. The expectation is that from here on the ad growth would be much better, looking at the upcoming festive season, the overall bullishness in the consumer space, the 7th pay commission, good monsoon should lead to a higher consumer trend, and that should lead to higher advertising revenues for a company which is in the print space. Apart from that, if you see, it has also acquired few other new emerging companies, Midday, New Dunya, Radio City, which are doing well. So the expectation is for the company to see a consistent 15% top line growth, operating margins of more than 30%, return ratios of more than 20%. So we have a buy rating on the stock, looking at a decent 20% upside in a 1 year's time.
Siddhartha, thanks very much for joining us with your understanding and of the markets and your investment ideas.